The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Quarters of technical trading and investing. It is TFNN.com. As always, we like to start off the day with just a little check of where the market is at the moment. We're up at 12 points on the S&P cash at 1827. And you want to get some volume if you're bullish. And of course, we're starting the show here with 1.83 billion shares on the New York consolidated tape. That's not a lot. Probably would think that we'd need 2.2 billion at this time to get any kind of action out here. Of course, we were 10 points higher on the S&P cash, and it's going to be probably tougher to get anything going for the next few days. Certainly, we're going to have a light volume. Friday, the markets are closed. Option expiration will be on Thursday. So, we'll continue to see a market that is at best tepid. But we've got a lot of things going on this week. We had the biggest IPO week ever scheduled last week. It was pretty bad with the exception of maybe one or two IPOs. Out of that 19, I can't even find out how many actually went out the door, but it didn't look like more than about 6 or 7. I may have missed more of them. I couldn't find anybody reporting on any of that, but it is problematic at best. You can always give me a call at 877-927-6648. That's 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. And as always, we'd like to start as soon as possible with some history to kind of start up the show. In 2000 on this day, the NASDAQ has one of its worst days ever, plunging 355 points, or almost 10%, to finish at 33,21.29, down 25.3% for the week. I'm going to repeat that, down 25.3% for the week. But tech stocks have largely gone through their valuation adjustment, says Lehman Brothers strategist Jeffrey Applegate, who's still around, by the way. I see him pontificating everywhere from time to time, who urges investors to buy. Robert Froelich, chief executive of the Kemper Fund, scoffs at the drop. Is a bare, brief day in the sun, and adds this is the greatest opportunity for individual investors in a long time. Of course, they were all horribly wrong. Markets don't top in an instant, and they don't reverse in an instant. And when you get some damage, one of the first things you're going to know or learn, if you trade long enough, is that there is a consolidation period. Markets just don't go to the top and then roll right over. They'll consolidate, and at that point, you'll find a lot of people liquidating their positions. Down at the bottom, they don't make the bottom in an instant either. A lot of times, you'll have a bounce, and then it'll come back down, lighter volume. And then, you got at least a chance for a up move in the markets that is predictable. That first move off the bottom is always called, or not always called, but has been called the automatic rally by the people that started price and volume trading, Richard Wyckoff. He calls that an automatic rally, but you really don't have any context to know just what's going to happen in that rally, how many shorts are in it. You know a lot more when it retests the previous low on either lighter volume, the same volume, or extensively more volume. Until then, it's very hard to get a handle on the markets. But normally when a trend starts, it will not end instantly, and we have a downtrend in this market. And even if we got a bounce today, My guess is that it'll last for a few days. We need to go back and retest the lows. At that point would be the first time you'd even consider covering your shorts. My guess is that we are going to bounce here today and maybe even in tomorrow a little bit. Maybe we retest today's highs tomorrow, and then extremely, extremely light volume into Thursday. When we look at the future or the options in the market, I'll probably bring that up later in the show. What we have seen is that horrifically huge and widening of the expected expiration happened on Friday. We went to something where they were looking for a low of 1810 on the S&P cash for expiration week to anything probably between 1750 and 1850 for a range. So basically, most of the option market makers decided that they had no idea, but at the absolute worst, they were looking at 1750, but at the absolute high, they're looking at 1850. So right now, we're looking at possibly, at least for their expertise, 20 points higher in the S&P, or 70 points lower. So it'd be hard pressed for me to go out and buy any stocks today. So what else do we have? Okay, just checking to see if we have anything going on. Got some emails. What is this? Okay, we're looking at Okay, so we've got a couple of questions we'll get to as soon as possible. Wanted to do a little bit of news since we missed Friday and we'll be gone this Friday. We were talking about IPOs last week. Of course, Farmland Partners came out on Friday. That IPO was at the very low end of the range. Almost all of these, if they do make it out, are going out at the low of the expected range or even below it. On Friday's close, the Treasury report had this title: "Stocks Continue Collapse." I don't know if collapse would be the right word, but certainly they are not very strong. So I'll be interested to see if we see any more of these headlines anytime soon. Of course, on the New York Post on Sunday, the SEC nixes high-frequency trading platforms, probably a little misleading for the business head of the New York Post, but it does look like all the Flash Boy book brouhaha is going to make them, or at least make them look like they're going to adapt a few rules for high-frequency trading platforms. And at least there's going to be something to go in there and probably hurt the profits of these high-frequency trading platforms. It's unclear now what they're going to adapt, but they are meeting, and it probably happen over the next 6 months. But I don't think anything will happen right instantly. For the most part, these people at the SEC would just like to sweep it under the rug. Intense lobbying by the NYSE's owners, Intercontinental Exchange Group, or ICE, for the reform of controversial maker-taker rule for buying or selling shares is likely to get more sympathy. The rules of I can't even say it. The rules abolition or amendment seen as increasingly likely, I can't even speak today, would help reverse NYSE's losses to rivals who have taken volume with their better pricing. But it looks like there's at least a few people striking while the iron's hot, and part of that is going to be ICE. The NYSE has seen just massive losses of volume in their trading floors because of dark pools and high-frequency traders on the ETFs. And I think we're going to see probably at least a fight over whether these high-frequency traders get additional regulation. Over the weekend, it was just kind of interesting. I wanted to see how solar stocks were doing. We talked, I don't know, a couple of years ago with one of the strangest editions of political corruption. At that time, the company down here in Tampa that goes and finds gold bullion in these ships and brings it up from the bottom had come into the news. It was an issue where the WikiLeaks guy basically posted all the cables, overseas cables. And at that time, what we found out was that there was a deal in the State Department to sell their find of gold of an old Spanish ship if they could get back a stolen painting from World War II. These folks were Jewish, and basically it was stolen by the Germans and somehow ended up in a Spanish museum. And this big donor in New York wanted their painting back, and somebody in the State Department was more than willing to hand back all the gold, millions and millions of dollars worth it, against these folks. And it was probably one of the strangest tales of political corruption. Of course, that went away fairly quickly. This weekend, we saw the Bureau of Land Management hire people to chase protesters around with dogs and put guns in people's faces. And it probably would have continued on, but the Senate Majority Leader was found to be involved in trying to get this land for Chinese donors for a huge solar project. And it doesn't matter which party it is. There's more than enough political corruption to go around. But I was very interested to see whether or not, when you see one of these articles and it's political in nature, there's always somebody's ox to be gored. In this case, it is those solar stocks. And I didn't get a big chance to look at them already, but about 5 minutes after someone discovered that there was the whole reason for chasing this guy off the land was putting in a giant solar installation from huge Chinese donors to the senator from Nevada. Within less than an hour, all the BLM police ran off and tried to make it act like this thing had never happened. But every time these things come across the line, someone's always making some money, and a lot of money goes to some political person out there. But stranger than fiction. But anyway, that's pretty much for the news other than tonight. And for a lot of people that follow TFNN, people are involved and think of the lunar cycles. I'd be very interested to see what happens tonight. If you do stay up, you're going to be able to see a red moon. That moon will be available for you to see somewhere between 3 and 4 a.m. But it's going to happen several times in the next 6 years. So if you don't catch this one, make sure that you find another one. Anyway, we're going to come back. We've got an email about SCO, and we'll look at some of these others and talk about them. Anyway, give me a call, 877-927-6648, or email me at path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, going to get to some email in just a second, but it's on a similar theme. But we've got Chris from Neodesha, Wisconsin. How you doing today, Chris?
Hi, David. It's Nashota.
Nashota. I think you told me that before. And since I went to scout camp at Neodesha, I'll probably always pronounce it that way.
Sure.
Anyway, let's go ahead. What would you like to talk about today?
What do you think about taking a short position on USO?
I was short crude going into the downside last week, and I thought there were a few things that were going against me time-wise. One was maybe a flight to at least anything that wasn't going down, commodities. I didn't like that gold wasn't going down, so I went ahead and closed that. Made a little money, but not much. I think we were in the OIH. But it was, to me, it didn't act right. And my guess is that I like the play, but I have a feeling it's a week from today play and not a play before this big long weekend. My guess is that we've got jets buzzing our naval fleets from Russia, and just a few more things out there. But my guess is if this is going to crack, it's going to crack after this next weekend, not before it. It looks weak. All the charts look good, but I have a feeling that it has more to do with being and staying up here than anything else with this long weekend coming. I have a feeling a lot of people would rather have their cash parked in long in energy than anything else. Not, just a lot of other problems. So I like the charts short. I don't like the timing of the long weekend. I'm thinking that maybe the thing to do would be a fire away at the open on Monday. What do you think?
I actually took a position in SEO at 2x short.
Yeah.
Here this morning, and I'm about even here, a little bit down. I
don't think it's a bad trade. I just think that the timing is problematic going into a 3-day weekend. You almost always have a bullish bias into these longer weekends, and the volume is going to be incredibly light, not only in the stock markets, but in the commodity markets. Pretty much going to lighten up too. And I don't like to be short in quiet markets. And I have a feeling that at least from what I've seen from the energy markets, they're going to be kind of quiet. Did notice one piece of news today, and that is gasoline had the biggest 1 month pop, or actually drop in usage ever, 1.3% down in 1 month. So there's lots of stuff out here that sets up exactly what you want, and the charts look beautiful. I've always gone with the theory in being short that you're going to be 3 days, 3 weeks, or 3 months early. And my guess is maybe you're going to be 3 days early on this.
Okay. Could you take a look at along the VXX, the ETF against the S&P VIX?
And I'm long volatility, so yeah. I like this. What are you?
That's where I'm too. I'm sitting on that, and it's working well, and I plan to hold it long term.
I think you got $69 in it. If you've got the patience to sit on it, you could get a huge move out of this. So, could we get a counter move that would bring this back down? The answer is yes, but I have a feeling if you sit on it long enough, we're probably going to see some spike, maybe up to 38 on the VIX. I think that's probably where we're going to see the next major or medium-term bottom in this market, if I'm correct. But that's what I'm looking at is a VIX in the 38 range, and from here that's almost seems impossible, but that's fairly likely.
When would you start to move your stop on the VXX?
I don't, because I basically go back to just about break even on my. I'm not using this trade, but I've got something else. But I pretty much don't like to move them up. There's other than a break even. Once you get this move, it will be violent. It will test you a number of times. But making the big money on this stuff is looking at the long-term trend in the market, not the fluctuations. If you trade in and out of these too much, I'll guarantee you they will eat your lunch. And that's the problem. If you get one on a winner, you just got to ride those things until you win all the way and hit the home run.
Thank you.
You bet, Chris. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we had Ken from Sheridan. Basically, same thing. Everybody's looking to short oil here. He was talking about SCO, and it's the same thing. I think these charts are lining up. I just don't think you're probably going to get any kind of big movement before Monday of next week. And I just would count to 3 before I pull the trigger on these. And that probably takes you to either the close and taking the shot at the close on Thursday, since we're going to have a 3-day weekend, or waiting, I think, better to check and see if you can't pick these up on Monday sometime. But I just have a feeling we've probably got a better bet on these commodities coming back if you're going to short any of them on Monday than you have going into this big weekend. Everything, world events, really make me think we're probably going to see slightly higher prices just going into the weekend. So, in fact, I would probably say if you were going to short crude, it would probably be Sunday night when you come back. My guess is that you'll probably have a very small window if you're shorting crude to get short when the markets reopen. But that's just a guess. I haven't been watching that closely on these, but I do like them. And looking to go long, Kinder Morgan. Well, I don't like anything long, but we'll take a look at it. And this is Jerry. Doesn't say where Jerry is from, but we will find out. I like the chart. Like a lot of these. Yeah, you're right into that. Great looking ABC down, Jerry. Let's take a look here. see, what is that? 81. Let's take a look at this. A, B, and this would be your C point. So you've done a 0.69 retracement. So basically 70% retracement back here. You're back into this huge gap down that had how much? 10.5 billion shares, and what you get, 1.7. I like everything about it. And your projection is back down to 68.19. Let's see if there's anything else out here. 68.19. Yeah, I like it. That would take you, I think you're probably looking at 65.04 for a failure here, and that's not a bad trade up here. So yeah, you got a nice 13-point ABC down, most likely, for a test of that 65.04, which is the June 5th low on these. So we'll be back in a minute. How much time do I got here? Oh, this is the long segment. I forgot even where I was at. Yeah, Jerry, I like that trade, and you could take it right here. One of the few things that I like. Oh, he wants to go, looking to go long. He must be, no. This was an excellent looking short. I don't know, think I'd be long. Kinder Morgan here. Yeah, this is a good example of being short, very short. Nope, Kinder Morgan, I would be short. Okay, Jerry's from Boston. Okay. In fact, I'll look at this one again if we hit, when's earnings on Kinder Morgan here? If it isn't too soon, earnings date. Take a quick look at that. April 16th. Okay. So you got 2 more days. Not enough time. But if this thing fails, look down to that $65 range, but I do not like this trade long at all. Okay, other things. I wanted to look at a few other stocks. I had put them down here. We'd been talking about Twitter, TWTR, and what's going on with this one. Huge short interest. It has pretty much come back into previous lows on lighter volume. So I would probably be taking my cash here. This morning, or Friday, can't remember which one, the insiders on this said and filed with the SEC that they will not be selling any of their shares that are locked up come May 6th. I think that's the date. And did a little bit to help this thing. It is one of the most hated stocks, but the short interest on this thing is ballooning. And without a lot of sales from those insiders, probably going to get a fairly decent bounce out of this thing. And I would think that you'd probably want to be looking more back at the probably $50 level to re-enter this short. But it probably, with as many people short in this thing, may be going sideways for a while. I think it's Splunk. SPLK, is that it? Splunk? Yeah, that's it. Another one of these that's already fallen off the edge of the map that everybody continues to email me about shorting. And why these things have come down on heavy volume. My guess is that we do have a few of these stocks that are somewhat exhausted. You're going to need a bounce out of these. You're going to need some consolidation, and you're going to need some time before these things set up the next leg down. Could you get back to this big gap that runs from about $49 to $52? I think the answer is yes, but the risk reward on a lot of these has gone by. It's time to start looking at these non-Dow stocks in the S&P 500 for the next big leg down. And I know that we had, did my machine turn off automatically on me? It can have, can it? No, I think it did. So I'm going to have to go back and pick something else up. What's happened here? Okay. Anyway, those are the two I wanted to talk about. You can give me a call at 877-927-6648, or you can email me at path@tfnn.com. I'll check to see if we got any other new... Oh, looking at Apple and Netflix. Okay. I was going to talk about the Max Payne with the spies. And here's where this thing gets ultra tricky. And like I said, on Friday, I saw one of the hugest changes in the character of SPY puts and calls. We went in through just a huge change in the character of where expiration was showing we would go. But right now, we've got something for the most part that shows us maybe we could get 185 on the high end for the spies, but they took about 181 on the spies and took it all the way down to 175. So what that tells me is the option market makers on late Thursday and almost all day Friday were working to make sure that they got out of any and hedged as much as they could to get out of any profits or loss down to 175. So I'm expecting probably some huge fireworks over the next couple of days, and that we're rolling over here on most of the movement. I think it's fairly interesting. I've got to try to do something. What is that? Does that work? Somehow I've got my little laptop in here into a different mode, and I can't see what's going on. So I think what we'll do is I'll just pop up yet another window. And okay. Hang on just a second while I get a few things taken care of. Maybe I can correct this during the break. I have to re-log in. Okay, testing. Come on. Come to daddy. No, I don't know about that. Anyway, if you look at this curve on the options, it's basically telling us to expect huge ranges down to 175. And could we go as high as 190? Options basically are saying that they've gotten most of the risk out up to 195 on the spies, but my guess is that that was just a byproduct of them trying to get at least out of the range of exposure through Thursday down to 175 on the options. So, like I said, expect the unexpected over the next few days. Okay, and now I got my volume back up. Okay, we're printing off 1824 on the S&P cash. We've just clicked over 2 billion shares on the consolidated New York Stock Exchange tape. So going to be having a very light volume move up to 1834 for the high today. And, yeah, we're good 10 points off that. But it's going to be very tough for, I think, to get back in and check and see if we've got anything else going on before we get into a few more movements here. Okay. Wanted to look at a few charts out here quickly for the end of the day and see if we've got anything else moving. Yeah. Okay. Let's see if anything out here really catches. You know, I didn't even put in charts this morning in the newsletter. I thought it had much more to do. Normally, the market's 50% of just about any trade, 25% is the sector, 25% is the stock. But what I've seen lately is that we are looking at a market that, to me, I'm probably moving up the market as a whole to 75% of any trade. So we'll take a look at it. Oh, we've got Lee from Tampa. How you doing today, Lee?
Good. How about you, Dave?
Fantastic.
Good. Hey, I have a quick question for you. I've been in cash in my 401k. On Friday, I decided to do a short term to go into the S&P for a bounce, and I wanted to get your thoughts on, you know, how quickly I should look to move that back to cash.
Can you do it right now?
Yes.
I would.
Okay. Too risky, huh?
Like I said, the risk reward here is horrifically bad.
Okay.
To be wrong. Now, can you I've got 3 minutes, so 4 minutes. Okay. Have you ever read the Fooled by Randomness by Nassim Taleb?
No.
Okay. He is probably one of the smarter guys out there, and I don't agree everything in the book. It's one of the 3 books I do recommend. But he goes, one of his stories is he goes in, I think around 1987, to a big meeting and states everybody wants his opinion in this meeting. And he says, I'm short, and if the market goes up 20 points more in the S&P, I'll double my position short. And I'm extremely bearish, but I think that there's probably an 80% chance we do go that higher 20 points. But I think that the 20% chance is that we go down 100 points. Mm-hmm. And that's what you always have to be looking at, is even if there's an 80% chance we go 10 points higher, you got that small chance that you get the tire that blows out. And right now conditions are extremely good for having a fairly vicious down move in the market, and I just wouldn't be, if you can't be long, I'd just sit in cash here. I think it's more appropriate to do that than if you can't be short or you don't want to short.
Right, I know can't be short in my case.
Well, you can buy reverse ETFs. Right?
Well, I can't do it in my 401k.
Yeah, you can.
Well, this one, it has defined investment options.
And they won't let you buy an ETF that's a reverse ETF of either the markets or anything else. No,
you can buy like bond funds, but other than that, it's pretty much just stock funds that are predefined. There's like 20.
I would be all cash.
Okay.
I can see no risk reward scenario here, especially when we look at a day like today where we're just rolling back over. Uh-huh. I don't know how soon you could get out, but I wouldn't be long here with anybody's money, including mine. Okay. And I think that there is going to be a time when we go down, there's going to be a huge volume spike down. Then we're probably going to come down and have a couple of bounces with lighter volume, and that's going to be the signal to go long again. But right now, put that money in your pocket and just have some nice iced tea like I am and right. Wait for the bottom to come back in. But I don't think that there's any signal out here that in fact, there's another great book that I recommend, which is called Reminiscence of a Stock Operator. Probably the most read book in the stock market and around Wall Street. If there is one that everybody talks about, it is that. But what is very interesting in that book is there's one sentence in there where the greatest shorter of all time says that basically what you're waiting for is complete demoralization. Mm-hmm. And I don't see it. I still see people trying to buy things going long in the stock market. And once I see everybody say that the end is nigh, then I will think about buying something long. But I briefly, I TiVo most everything on like CNBC and fast forward through it. And I want to find some people that are in the world. And they're just in anything.
Thank you very much.
We'll be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, there's a bunch of stocks probably that have already been crushed that at least look like they're pretty much look like that they're going to go sideways for a little while. Maybe the worst is over on those. That makes me think that we are looking at the next round of stocks and probably the mid caps being the worst and most hit. And then eventually we'll probably move up to those 30 Dow stocks. But at the moment, it looks to me like there's a great deal of these less expensive stocks out here, to put it mildly, that probably give us pause to shorting them. In fact, they actually look fairly good. Some of these biotechs do look like they would and do have some fairly decent buy patterns out here. But I don't see much besides that very small cap and biotech that have lined up. But you would have liked to seen them bounce fairly well. One of the ones that I'm taking a look at, and they may just be the stocks that run in the downtrend, but it's the Alexion Pharmaceuticals, ALXN. Beautiful pattern up here. Took off with decent volume on the 30th of January, gone up to its highs, come back down. You don't like the high volume on the 21st of March, but I do like the fact that this thing has come back in with a 2.8 million shares on April 4th, and then, of course, on Friday, 2.4. But today, nice little doji out here on 1. But like I said, most of these charts, I have a feeling, are not telling the story of the market, which is that probably 75% of what we're going to be looking at over the next 3 or 4 days is the market as a whole. A lot of these stocks, like they said, don't throw the baby out with the bathwater. But I have a feeling that's exactly what we're going to get. The rollover today, up 9 points on the S&P cash from a lot higher with almost no volume, continues to be tough. Got a question. WFM in the den. WFM. Whole Foods. Yeah, another one of these stocks that looks very good out here, or at least at support at 50. The biggest problem, I think, with Whole Foods right now is the news coming out Thursday and Friday last week, where Walmart is going to be getting in at least somewhere into that Whole Foods market with fresh produce. I'm just curious just how much that will hurt them, because probably not enough things in Walmart don't have Chinese lead painted on them. But, a wonderful looking chart in a lot of these stocks. But again, I don't think that, and even on the best day, I look at these charts on the individual stocks as being 25% of the trade. The other 25% would be the sector, and the 50% of it would be the markets, and the markets are just ugly. So, what can you do? I don't think you can put too much stock in the individual chart. It is all about the markets, at least for the next few days. We've got to Rob from Montclair. How you doing today, Rob?
I'm good. How are you?
Another day in paradise. Although we just have a minute. What are you looking at here?
Well, I'm in cash now. I don't have anything. Would you go short the market today, or would you wait till next week?
Well, I certainly wouldn't pull the trigger here short because it'd be too easy to get stopped out. But on any bounce that you can get up to, maybe a 38% bounce of the last move down would be your next entry point. But I think if you didn't take the short at the highs today, it may be tough to chase this thing down.
Great. Thanks very much.
You bet. That is the problem. These short markets can be vicious moves up and down. You really need to start when you get the signal and hang on for dear life. We'll see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.